आपने भी गूगल पे सर्च किया होगा या आपने किसी दोस्त से पूछा होगा विच इज द बेस्ट म्यूचुअल फंड वेयर यू शुड इन्वेस्ट योर मनी एंड यू एंड अप विद रैंडम नेम्स एंड conflicting advices. You are not alone. 99% of new investors start here, confused and scared of making wrong choice. But the truth is, picking right mutual fund is not about copying someone else's list. It's about matching funds to your needs. And there is a powerful way to do this using simple filters. In this video, we will discuss step-by-step process of selecting any particular criteria, which is similar to your investment goals and your objectives. Firstly, you should open Tickertape in your browser. You can see all those filters which you can select as per your goals. Think of these filters as your investment GPS. Instead of investing blindly, you set the destination, which is your goals. Screener filters help you to shortlist funds that match your exact needs, saving your time and money. Let's start with our first filter, AMC, that is Asset Management Company. This is the company that manages your fund, like SBI, SDFC, ICICI. While investing, you should prefer AMC with long-term track record for at least 10 plus years, good governance, and variety of funds. If you are a beginner, you should stick to top-tier AMC. If you are an experienced investor, you can prefer small AMC, but only for small portion of your portfolio. If you would like to have street food, would you prefer chef which you trust or just a random stranger? AMC is a chef of your money, so choose wisely. Next filter is benchmark, the index or yardstick the fund compare its performance with. It may be either Nifty 50 or Sensex. Benchmark should match the fund type. Equity funds to Nifty or Sensex. Debt funds to debt benchmark. If you are a passive investor, funds closely track the benchmark and it should give returns which are similar to benchmark. For active investor, you can prefer funds that beat benchmark. It means it can generate positive alpha. Picking the wrong benchmark is like comparing test runs to T20 runs. It's all worthless. Next filter is expense ratio, which is expressed as percentage of your total investment. If you are investing in index fund, expense ratio should be less than 0.5%. And if it's an actively managed equity fund, expense ratio should be around 1% to 1.5%. If you are investing in debt funds, it should be less than 1%. If you are a long-term investor, you should prefer funds which are having lowest expense ratio. If you want to invest in aggressive active funds, you can accept slightly higher expense ratio only if its consistent outperformance is proven. Here is one interesting fact. If you want to invest in blue chip companies, you should directly invest in stocks rather than investing in mutual funds which invest in blue chip companies because it will reduce your returns. Next filter is NAV, net asset value. It's a price of one unit of the fund which gets updated on daily basis. NAV alone doesn't say whether fund is good or bad. Lower NAV is not always cheaper and higher NAV is not always expensive. Focus on returns and consistency, not NAV. Next filter is lock-in. It's a minimum period before you can withdraw your money. If you are investing in ELSs or tax saving funds, there is a mandatory lock-in of 3 years for the purpose of tax deduction under Section 80C of Income Tax Act. It's ideal for serious long-term investors. Most of the equity, debt, hybrid funds have no lock-in. You should prefer lock-in if you want to avoid emotional panic selling or if you need tax benefits. If you are filing your income tax under new tax regime, there is no mandatory requirement that you should invest in funds that having a lock-in. Next filter is exit load. It's a penalty for early withdrawal, usually if redeemed within 1 year of investment. If your goal is short-term, you should prefer funds with low or zero exit loads. If you are a long-term investor, exit load doesn't matter for you. Filter is fund manager. You should prefer managers with 5 plus years of experience in the same fund. They should have a proven track record and stable strategy. Next filter is SIP investment and minimum SIP. If you want to develop the habit of investing your monthly salary, you should prefer low minimum SIP. Everyone can start small and scales up as income grows. If you want goal-based investing, you can set SIP to match your target corpus. Now you know exactly what each of these filters mean and how to use them for your unique goals. No more FOMO, no more confusion. If you found the content meaningful, please like, share and subscribe to my channel Market Monetizer. I will be back with the second part of this video. These filters are just the first step. Want to learn how to use risk, return and other advanced filters? Hit subscribe now or watch out for part 2, where we go deeper and build your perfect mutual fund shortlist.